Hello guys, welcome to another video. So today we're going to look at VIX 75 and I'm just going to show you an analysis, top-down approach. You know, we always do top-down approach. That's why we are able to come up with such accurate predictions, because of what we are checking all these time frames and then make the decision at the end. I mean, so if you're new here, make sure that you subscribe so that you can, you know, you'll be able to follow the channel and be able to, you know, catch the next uploads as well. But if you've been on this channel, you'll know how we do things here. So we're gonna start with the highest time frame and then work our way down until we get to those smaller time frames where we do what, where we execute trades. All right, so let's start with the monthly chart. This is how our monthly chart looks like. So on the monthly chart, what is it that we are saying? So our take now is that the price is inside a support, a very nice support. Let's change color and use pink. So we are currently inside a monthly support. That's point number one, right? Which is suggesting that we could go up. But one thing about that support that suggests we could also continue going to the downside, or the strength of it pushing to the upside is not so great, is that support is not fresh. You see, simply because of what, it was touched here multiple times. Now we are coming to touch it again, so it's not fresh. So sometimes when a zone is not fresh, we find that the orders that were there, they were collected the last time the price was there, and then it ends up just violating it. But it being a support on a monthly chart, that means something. It's on monthly chart, so it wouldn't be wrong in you saying on my smaller time frames, if I were to get a confirmation to go up, I will do it. Because of what, the location, we are inside a support. We understand it's not fresh, but it doesn't mean if it's not fresh it needs to be taken out now. That's the mistake that some people make. You know, you'll be saying things like the trend line has been touched 3 times or 4 times. Now I'm gonna sell against it. You know, it's a bullish one, it's been touched 7 times. Now you're saying it has to be broken. No, it can still be touched until 20 times. You don't know how many times it's gonna be touched before it's broken, or if it's even gonna be broken. We know that the more something is touched, the weaker it gets, but it doesn't mean it should be broken now, right? So in terms of the trend, we are definitely bearish, and we were bullish at some point. We had a very nice trend line. The trend line was taken out, areas of support taken out, and then we had this nice looking area of resistance that we spoke about in one of the previous videos. And this is the one that pushed the price to the downside and broke the trend line and broke the support. That's why when the price went up to it, we did say that it's not a bad idea for you to try and sell from this support, simply because this is from that resistance, simply because it's a resistance that accomplished a lot. It pushed the price down, it broke the support, and it also broke the bullish trend line. So, and we are also bearish. So that was a very nice area for you to search for selling trades. And now we have reached the floor, which is what, a support. That's what we are saying. It's not bad for us to, it's not wrong for us to maybe search for buy trades on smaller time frames if we get reasons to go in. If we don't get any reasons, then this thing just continues going to the downside. It's most likely gonna then continue until this area here. But we're not gonna talk about this one for now, simply because we still have to deal with this one first. So we'll only shift our focus to the next one once this one has been taken out. So that's all that you need on this time frame. So let's move to the next time frame, which is what, a weekly chart. The weekly chart, we can definitely see that, it is also in a what do you call this, in a downtrend. You have a bearish trend line here, and you have your nearest area of resistance here on what do we call this, on our weekly. And you can use whether these ones have been taken out or not. If yes, then you're gonna have this as your next one. You are still very much bearish, and as being inside that monthly support, selling is not something that's high odd, but we can do it short term, because you know where you are. The price can just, you know, turn at any moment and go up, unless if it continues dropping and take out the support. But you don't know when it's gonna react. But we just say, based on the location, it's much safer if we try and search for trades to go up, right? So now here we are bearish, and we had this last week, which is what we closed with a very if you can check there, the price, as much as the candlestick was red, but it was not showing that. If you compare that candlestick with this one, or with this one, or with the current one, you will see that the three that I marked with the arrows, they are showing that the bears were pushing strongly to the downside. But when you talk about this one, it was saying that, oh, the bulls look like they're coming in. That's why we have got these tails, because the bulls are trying to push up. So when we saw this, we're like, okay, this is where things are not decided on who is pushing more. So maybe this is where the bulls are going to try and push, and the following weekend win that, because of what, the location, we're still inside the monthly support. So it was not wrong in us trying to say maybe that will happen. But now when you have that, and then you end with the price breaking below that candlestick instead of going to the upside, you can see that whatever the bulls are trying to do there has been taken out, has been defeated, has been invalidated. It's like it does not exist, because now we move to the downside. So the bulls have been taken out. So you have to wait for another signal that says the bulls are coming in, then you try and react. You're not gonna predict a buy trade, whereas you can see that the structures are bearish. So you need to wait for the bulls to try and say, we found the support, we are trying to block the price from breaking this, and then you're gonna try and buy from that. So for now, even in this time frame, we don't yet have a reason to go long, but we're saying, should we get something to go long, we will take it, because of what the location where we are. Now let's move to the next one, which is gonna be our daily chart. So basically, this is what I teach. There are guys that I taught these things, and we had a couple of sessions, but for now I'm not taking anyone in. Maybe in Jan or in Feb I will continue teaching, but for now I'll just give you the videos. So if you're interested in being in the next group, you will just leave a comment, or if you just watch the other videos I used to put a number on the screen, then you will just text me on that number. All right, so let's continue. So this is the daily chart. We can clearly see that daily is still the same as what we saw on what, on monthly and on weekly, which is what, bearish, right? The bulls are trying, you can see they're trying to bring in some white candlesticks there, but when they are doing that, they are not breaking any resistance, they are not breaking any bearish trend line, so they are not defeating the bears. That's why the bears still defeat them and push them back. So for you to convince us that you're defeating these guys, remember, when they're going down, they will form this. They will form bearish trend line, they will form resistance. So if you were a bull and you want to convince us that you are reversing the price, at least break the trend line or break the resistance. Then you can say, okay, the location allows us to take buy trades, and now the bulls have just convinced us by doing what? By breaking the key structure there. So that's why you're like, okay, when I see that, I can take that as a signal that maybe the price wants to change. Then you start planning your buy trade. You see, rather than you, when you see the price is falling, you try to catch that. No, the price is bearish, so you need to wait for it to show you something before you go in. So this being bearish, we have got a bearish trend line here, and we have got this as our nearest resistance on our daily, right? So if you're someone that's trading daily and you feel like you want to continue selling, I'll say you need to be careful with that, because of what, the location, and you need to keep in mind that that is only a short-term trade until if the price breaks that monthly support. Then you know that when you're selling, you don't have anything to be scared of to your left until the price touches the next resistance. But for now, because we are inside this one, you need to be careful when you are taking those sell trades. You need to remember they are short-term, because the price can just reverse from that, right? So, but in terms of you buying, also, it's not something that you can do as yet, because of what we are saying, the structure is bearish. Maybe if the price was to go up, remember what I was telling you now, and show that it is reversing that, then you can try and take a buy trade and target these guys here, and then the next one will be that one. That's how you should do it. So even here, we are still very much bearish. There's nothing as yet that will say to us you can start buying. And then let's look at our H4, right? So this is our H4, right? And the guys that I taught, they know that, when the price was around there, it was a zone, but not a good one. They needed confirmation for them to sell there, because the price was still very much to the downside. The structure was still very much to the downside. So you needed confirmation for you to sell there. If you gotten your confirmation, that's good. As long as you know that you are searching for confirmation at a significant area. We're not searching for confirmation in the middle of nowhere. So even here, we don't yet have any what do you call this? Anything that says to us the price could be turning. So because you can have your bearish thing there, a bearish trend line, you can have your resistance there. And if you're executing on H4, you can maybe, if you're getting confirmation around down there where the price is currently, if you get whatever that you use as your confirmation, a pin bar, engulfing, whatever that you use as a price reversal signal, right, you can take that, but keeping in mind that price or the structure is still bearish. You just took that early trade inside that bigger monthly support, and you got your confirmation on your execution time frame, and then you decide to take a buy trade. When you're taking that, you're not gonna say I'll put my take profit there. No, if you take that, this is your TP. Because of what? We are still very much bearish. We can still turn and do that. So we're not gonna predict that because now we are reacting, the price has to break that. The same thing here. Yes, it did that. It went up. You can see some pin bars there. It went up, but it didn't go up, it didn't break all these structures. So that's why you're saying you will target the next opposing structure. So you get confirmation there, you're going to take that trade, and then you need to be out there, or you need to tighten your stop losses, because this is still very much possible, because the structure is still very much bearish. So but if the price does this, you just target the support, and then you can continue buying like that. So you need to let the price show you what it wants to do. Then based on that, you will try and get a trade. The same thing here. If you're someone that's executing on H1 and you get confirmation there, you will use the H1 structure, then use this as your TP. And on H1, your trend line will be here. And when the price gets there, if it breaks, you can get a buy trade and continue buying like that. And when you're buying like that, you'll be targeting this guy here. If you get that, you'll be targeting this. You see? Let me show you. Let me draw this thing so that you can see that the trend lines on these two time frames are not the same. This is our H4 trend line. Let's go back to H1. This is our H1 trend line, right? So if you are buying here, you're going to target this because you're buying on H1, all right? Should the price break, you're going to target this as your max TP. You are out. That's your H4 trend line. Should it be broken also, it means now you don't have any other thing, any obstacle along the way. Then maybe that's when the price would be confirming that now it is reversing. Remember, you need to wait for it to break the structures before you continue trading in that direction. Until that happens, no, you're not gonna trade in that direction. You'll only trade until the obstacle is hit. Then once that obstacle is out of the way, then you can target the next one. That's how you should do it. I think we should end it here. That's what you can expect from VIX75. So without those confirmation, you're not gonna try and execute at the bottom. You need to wait for confirmation first on whichever time frame that you're trading, and then you're targeting the next opposing structure on that time frame. All right, guys. So that's all I wanted to share with you guys. I'll see you in the next video. Thank you, and please don't forget to like and subscribe, and also share this channel, so that even other people can discover it and then come and watch the videos as well. All right, sharp.